Hello everyone, my name is Bree Barber, and I will be talking about learning objective number 3, which is depreciation recapture in our Accounting 251 class. Alright, we will be going over what exactly is depreciation recapture, and we'll also go into the two different asset types that this will apply to, which is a Section 1245 property and Section 1250 real property. Bam! Now that I have you guys' attention, let's go into what exactly is depreciation recapture. So what is depreciation recapture? It potentially applies to only gains on the sale of the depreciable or amortizable business property. When it is applied, it changes the character of the gain of the sale of a 1231 asset from a Section 1231 gain to an ordinary income. Losses are not affected for any 1231 assets. And also, computing the amount of depreciation recapture does depend on the type of the 1231 asset. So the next slide. So we have three different types of 1231 assets. As you already know from the previous lesson, we had the pure 1231 asset, which is usually land. However, we're going to go into details of the 1245 asset, which is personal property and intangibles, as well as we'll go dab into the 1250 asset, which is depreciable real property. So Section 1245 property is usually personal property and intangibles such as machinery, equipment, patents, copyrights, and purchased goodwill. The gain from a sale of a 1245 asset is characterized as an ordinary income up to the extent that the gain was created by the depreciation or amortization deductions. The ordinary income under 1245 would be the lesser of either the recognized gain on the sale or the total accumulated depreciation. And we'll go into that just a little bit more. If there is any remainder of a characterized gain, it is then characterized as a 1231 gain. Ordinary income plus our 1231 gain will then equal our total gain recognized. Depreciation recapture changes the character of the gain, not the amount. And also, as a little note to self here, depreciation recapture does not apply to losses, and we'll see that in an example coming up. Excuse me. So we're going to go on to three different types of a Section 1245 asset sold problem. So we have Kevin, who's an individual who bought an asset for $600,000 and has claimed $100,000 of depreciation deductions against the asset. We'll look into what the amount and character of the recognized gain or loss if the asset is sold for $550,000, the amount of character of the recognized gain or loss if the amount is sold for $700,000, and what would be the amount and character of the recognized gain or loss if the asset is sold for $400,000. So if the tangible personal property sold for $550,000, as a reminder, we do have our amount realized of $550,000. We have our original basis of $600,000 when we first purchased the item, and we also have $100,000 of accumulated depreciation. We would then need to subtract line 2 from line 3 to get our adjusted basis of $500,000. From there, we would then calculate our gain or loss which is based on subtracting line 1 from line 4. In this case, we would get $50,000 by doing that. And to get our ordinary income, we would then take the lesser of our accumulated depreciation or our total gain, which is $50,000, which is $50,000 in this case. And because our line 5 minus our line 6 is 0, we will therefore have no 1231 gain. So our next example would be if we had our tangible property sold for $700,000. We have our amount realized of the $700,000. We then have our same original basis accumulated depreciation of $600,000 and $100,000, which gives us an adjusted basis of $500,000. We therefore have a new gain of $200,000, and we get this from subtracting, once again, our amount realized minus our adjusted basis of $500,000. We then have our ordinary income of $100,000. And to get that $100,000, we will then take the lesser of line 3, which is our accumulated depreciation, or once again, our line 5, which is our gain. And in this case, our accumulated depreciation, it would be the amount we would take because it is the lesser, and we cannot, and of course, we cannot take more than what we already accumulated. So therefore, that $100,000 will then be ordinary income, and because we still have excess left over from that, we will then have another our other $100,000 will then be classified as a 1231 gain, and we did this just by subtracting our gain or loss minus our ordinary 1245 depreciation recapture. So example C, what would happen if a tangible property sold for $400,000? Well, we have on our amount realized of $400,000. Once again, we have our same original basis and accumulated depreciation, as well as our adjusted basis, which all would then total to $500,000, as we've seen in the previous two examples. We would then get this time we would then get a loss of $100,000 by subtracting the $400,000 amount realized from the $500,000 adjusted basis. And because we have a loss in this case of $100,000, we therefore won't be able to capture a 1245 depreciation recapture because that depreciation recapture does not apply to losses. And as a matter of fact, because we have a loss, that entire loss will then will be classified as a 1231 loss. Alright, so just going into section 1250, which is real property. Real property is pretty much an office building or warehouse building, any type of building that is sold as an asset. Sold as a gain. And when it is sold as a gain, it is not subject to any 1245 depreciation recapture. In fact, under 1250, when the depreciable property is sold as a gain, the ordinary income portion is limited to an additional depreciation. However, because real property is depreciated using straight line, 1250 recapture generally no longer applies. As a result of that last statement, there is a section 291, which is depreciation recapture, and this is more geared towards C corporations. The definition of the 291 is the portion of a corporate taxpayer's gain on a real property that is converted from a 1231 gain to ordinary income. C corporations selling depreciable real property capture ordinary income of 20% of the lesser of either 1, the recognized gain, or 2, the accumulated depreciation. So it'll be kind of similar to a 1245 with the difference of taking 20% of either the gain or accumulated depreciation. So let's go to an example. So we're now going to assume that Kevin is a C corporation and they purchase a non-residential building for $500,000, and they have claims of $100,000 of depreciation deductions against the asset. What are the amount and character of its recognized gain or loss if the asset sold for $450,000? So we have our amount realized of $450,000. We then have our adjusted basis of $500,000. We have our accumulated depreciation of $100,000, which then gives us our adjusted basis. Line 2 is original basis. I'm sorry, not adjusted basis. Line 4 is our adjusted basis of $400,000. And we would then recognize a gain of $50,000 by taking line 1 minus line 4. So now after, once we recognize our gain, we need to see what is the lesser of the accumulated depreciation or recognized gain. And in this case, our line 5, which is the recognized gain, is lesser than line 3. So we're going to use that as our total gain. And to get our 291 recapture, we would then take 20% of our $50,000 total gain, which gives us $10,000. And that will be our ordinary income. And then once we subtract our $50,000 from our $10,000, we would then, the remaining portion of it will be $40,000, and that will be classified as a 1231 gain. So a summary of what we learned today is basically what is depreciation recapture. We also reviewed and calculated a 1245 asset, and we also reviewed and calculated a 1250 / section 291 asset as well too. Well, you guys, I hope you guys all have a great rest of your day. And that's my nephew and Coco. This is their nap time right now, so good night, everyone.